trading session where we are going to be focusing on trading NFP, and we're going to look into a systematic and technical approach into trading the Forex market during this closely watched high impact news event, which is the non-farm payroll, the US high impact news event. All right, so welcome to another CWG Markets trading session. Today we're going to be looking at the December NFP, where we're going to look at trading the NFP high impact news live in real time. And I'm going to be showing you guys a systematic and technical approach to how I trade the financial markets during NFP. Now, before we continue with the session, I just want to bring your attention to the fact that any news, opinions, research, prices, analysis, or information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you're looking for investment advice, then you need to contact a regulated financial advisor who can help you with such. Now, for those of you who haven't met me, my name is Dumelo. I'm a senior market analyst at CWG Market South Africa, and for the past 10 years I've been a full-time professional trader. I manage my own capital and also manage capital for a group of high net worth individuals. I am a technical analyst and focusing on trading currencies, stock indices, commodities, as well as cryptocurrencies. And personally, I have taught and coached thousands of traders locally and internationally on how to trade the financial markets successfully in a structured and systematic fashion. Now, some of these students have become full-time traders themselves, running successful trading businesses, and others use trading in the financial markets as their main source of additional income as investors. Now, what's helped me to get to this point where I am right now is that 10 years ago, when I first learned about trading in 2014, I made the conscious decision that trading would be the vehicle to help me, to drive me to my financial goals, and that I was going to do whatever it takes to surround myself by the best traders in the world and learn everything that I need in order to master this skill set. Now, this is a skill set. It's not a get-rich-quick scheme, and you can use it as a vehicle to help you to reach your financial goals if you treat it as such a skill set. Now, for those of you who are looking for constant market updates, make sure that you stay in touch with our Telegram channel, where we provide daily tips and market analysis on this channel. So this channel where you're watching the live stream right now is where you're going to get all your constant updates. Now, the agenda for today is simple. We're going to check our economic calendar, and look at what high impact news are coming up for the day. Then what I'm going to do is I'm going to analyze the markets, look for opportunities to capitalize on, and actually take some trades, and basically just explain to you how I analyze the markets during non-farm payroll events. And then what I'll do is I will explain the strategical approach and explain the strategy that I use to look for opportunities and capitalize on opportunities in the markets. And then what we'll then do is I'll end the session from there. Now, what is NFP? Now, NFP, as you can see on our economic calendar, is we've got high impact news released today on the US dollar in about 1.5 hours or 2 hours or so. And clearly what we see here is we've got high impact news on the US dollar, and specifically on the US dollar. What we can see here on the US dollar is that we've got high impact news on the USD average hourly earnings month on month. We've got core retail sales month on month. We've got high impact news non-farm employment change, which is our NFP. And then we've got retail sales month on month, as well as the unemployment rate in the US. Now, I'm going to explain to you what these high impact news indicators actually represent, just so you can have a fundamental understanding of what it is that is happening today and why this high impact news is being released, and basically give you a fundamental analysis of how it's going to influence the markets. Starting with the first one, which is our USD average hourly earnings month on month, which is a key economic indicator that measures the monthly percentage change in the average hourly earnings for all employees in the US, excluding the farming industry. And this indicator is a critical indicator of the wage growth and labor market conditions in the United States, which is a key economic indicator which tends to have a significant influence on the value of the US dollar, and also tends to lead to high volatility in the market when this indicator is released in the market. So that is our average hourly earnings month on month. The next one we have here is our USD core retail sales month on month, which the core retail sales is an economic indicator that measures the monthly percentage change in the total value of retail sales in the US, excluding sales from the automotive sector. And this indicator is a critical indicator of the consumer spending in the US, which is a key driver of economic growth in the US. So this is important because increasing retail sales suggests rising consumer confidence, increased disposable income, and also overall economic expansion in the US, whereas declining retail sales may indicate weakening consumer confidence and economic contraction. So as you can tell, this is a significant economic indicator that has a high direct influence on the value of the US dollar itself, which tends to lead to a high probability of high volatility in the market when this high impact news is released. Next, we have our USD non-farm employment change, which refers to an economic indicator that measures the net change in the total non-farm employment in the US. And this is a critical indicator which basically tells us about the number of jobs in the non-farm sector of the US economy. And it excludes employment in the agriculture, government, and private household employment. But this is a closely watched economic indicator in the US because it provides insights into trends in the employment and labor market conditions, which is a critical factor influencing consumer spending, economic growth, and monetary policy decisions. So this is an economic indicator which has a direct influence on the value of the US dollar as well. And then we've got our USD retail sales, which is an economic indicator that measures the monthly percentage change in the total value of the retail sales in the US. And it is an economic indicator, obviously providing insights into the consumer spending patterns and the overall economic activity in the US, again, which has a significant direct influence on the value of the US dollar, which tends to lead to high volatility in the market when this economic indicator is released. And then what we have as well is our unemployment rate, which refers to the measure of the percentage of the labor force in the US that is unemployed and actively seeking employment in the US. And again, this is a critical indicator of the health of the US labor market and the overall economic conditions in the United States. Again, this tends to have a direct influence on the value of the US dollar, which tends to lead to what we call high volatility in the market. So the aim here as a trader is whenever these high impact news are released is because there tends to be a high probability for high volatility in the market. The key for trading is to ensure that you position yourself in the market where you can take advantage of the high volatility in the market and actually basically make high amounts of pips in less amounts of time. And that is the goal of a trader during high impact news, especially for advanced traders. So the goal for me today is to look for opportunities where I can position myself in the market to catch high volatile moves where I can make high amounts of pips in less amount of time and catch the volatility, position myself in the volatility or the high volatility so that I can be on the right side of the market and trade in line with the smart money. So that's going to be the goal for me during the session, is if there is high volatility in the market, to make sure that through the analysis that I'm going to make, to position myself in the market where I can take advantage of the high volatile moves and make high amounts of pips in less amounts of time, which is what trading is about at the end of the day. So for those of you that are going to be trading today and are trading with CWG Markets, just to bring your attention to CWG Markets Welcome Bonus, which is a bonus that helps you to double your trading capital and enhance your buying power. So with CWG Markets 100% Welcome Bonus, you can enjoy a 100 bonus deposit on every deposit you make into your trading account up to the value of 1,000 USD. So basically you double your funds, you have more margin to trade and more equity to trade, which allows you to grow your account in the most efficient way possible. Okay, so again, the focus again is on our USD high impact news. And again, we're going to be looking at our average hourly earnings month on month, our core retail sales, non-farm employment change, unemployment rates, and retail sales month on month. And basically these high impact news or these economic indicators have a significant influence on the value of the US dollar, which tends to lead to a high probability of high volatility on the US dollar itself and any USD related currency pair. So the currency pairs that are going to be of focus in today's session will include AUD USD, Euro dollar, GBP USD, NZD USD, dollar CAD, dollar Swiss, dollar yen, gold, US oil, which is WTI crude oil, US 500, which is S&P 500, UT 100, which is NASDAQ 100, and US 30, which is the Dow Jones. These are US related stock indices. So again, these are going to be the symbols of focus and what I'm going to be looking for opportunities in today's session as well. So the strategy that I'm going to be using today is a strategy which basically consists of identifying high interest levels, drawing those high interest levels, and analyzing the markets at those key levels, and therefore looking for confirmation of entry and signals at those key levels that I'm going to identify. Now, this strategy is suitable for traders that are looking to trade high impact news events. It's also suitable for traders that are day traders that want to look for intraday trading opportunities, as well as swing traders that want to look for low risk, high reward potential trading opportunities as well. Now, the best time to use the strategy is when you're trading high impact news, such as today, and also if you are a day trader looking for intraday opportunities as well. Now, the strategy is a 5-step strategy, which consists of identifying the high interest levels, drawing the high interest levels, analyzing the price action at those high interest levels, looking for confirmation of entry, and then placing the trade once a confirmation of entry has been received. This is the 5 steps that I'm going to be following in today's session. Like I said, I'm going to first analyze the markets, look for trades, since this is mainly a live trading session. Once I look for trades, capitalize on some trades, then before I end the session, I'll explain this 5-step strategy in a little bit more detail so you have a more fundamental understanding of how this strategy works. Okay, so now what I'm going to do is I'm going to move over to my charts. So I'm going to share a new screen here, and what I'm going to do now is I'm going to share my charts, and hopefully you can see my charts here, where again, like I said, the symbols of focus will be AUD USD, we've got Euro USD, GBP USD, NZD USD, USD CAD, USD CHF, USD JPY, USD gold XAU USD, US oil, which is WTI crude oil, S&P 500, US 500, US 30, and UT 100, which is NASDAQ as well. So these will be the symbols of focus for the session today. Okay. So the first one, which I'm going to be looking at, is I'm going to be looking at AUD USD. So Aussie dollar. That's going to be the first symbol that I'm going to focus on. Okay. So for those of you that are going to follow along, I'll give you about a minute or so to open up your charts and open up your charts and go to AUD USD. So I'll give you a minute or so to do that. Okay, so AUD USD, this is the first symbol I'm going to look at. First thing I'm going to do is I'm going to switch to the 4-hour time frame. And what I'm going to do here is I'm going to identify potential supply and demand levels using my Forex volume indicator at the bottom of here. So the first one I see here, the first clue I see is I see a potential supply level here where price pushed down with high volume. So that's going to be my potential supply level. Now, in terms of demand, the demand level, which I will take a look at, will probably be around this level over here, or this level over here, where price pushed up with high volumes. This could be a potential demand level over here. So the demand I'm looking at is December 9, 4 a.m. candle, and the supply is December 15, 1600 hour candle. So now what I'm going to do is I'm going to switch to the 15-minute time frame, and I'm going to go to where I identified my potential levels, starting with December 15. And December 15, what I'm going to do is I'm going to draw those levels. Again, using my FX volume as the clues here to identify what is happening. So I see potential clue here. There's another clue over here. Another clue over here, which is no longer relevant. Another one over here, which is still relevant as well. I do see more clues on this side as well. Over here, another clue over here, which is no longer relevant, but another clue all the way up here and here, as well as over there, which is still relevant. So those are the clues there. And now I'm going to draw in the levels, starting with the first one here. We've got this one here, which is still relevant. I've got this one over here, okay, which is relevant still, giving me like a little bit of a zone. Another one up here, this one over here, which is pretty much on the same level as the other one. This one here no longer relevant. This one here not relevant anymore. And then I've got this one here up here, and this level over here, which is pretty much in the same zone. So the ones that I'm not going to use, I'll delete. So there we go. I'll delete that one. And basically what I'll do here, just so you are not confused, is I'll draw this in as a zone so that you can see exactly what I'm doing over there. Okay, so that's a little bit of a zone over there. So basically what I have is December 15, I've got 1715 candle, 1700, 1630, 400 hour candle. And then December the 12th, I have 1630 candle and 1700 hour candle over here, which is the next level above. So these are my supply levels. Now what I want to do is continue back to December 9th and look for the demand level which I identified. So what I'll do here is switch over here to December 9 here, and then I'm going to look and see if there's any potential levels that I can see here. So there is a level over here which is no longer relevant, same as this one down here, and this one over here. Let me see if this one is still relevant. I'm not too sure. Then got this one down here as well, which could still be relevant. I'm not too sure. We'll give it a look. So let me just do this first. So that's the first one. That's the next one down there. Let me go here and see. Okay, this is still relevant over here. So what we have is, I'll do this, put this one over here. We have December the 9th, we've got the 300 hour candle, and December the 8th, we've got the 2100 hour candle, which is a zone where price pushed up with high volume. However, what I want to do though is I want to go back to the 4-hour time frame and identify the next potential level in case price pushes below over there, which I see here on the 4-hour. The next potential level could be around over here, December the 4th, 1600 hour candle where price pushed up with high volume. So now we go back to M15, we go to December 4th, and now we can start to look for additional levels, which as we can see, there's a clue here, not relevant anymore. This clue here is still relevant. Got another clue over here, also relevant. This one here, not relevant anymore. This one over here, we'll have a look. And this one down here, as well as this one over here, where price pushed up with high volume. So that's the one level here. The next level over there, which is more of a zone. This one over here, which is pretty much in the zone. So I'll leave that out for now. And I'll put this one over here. And this one as well, which is pretty much in the same zone. So I'll delete these ones. And then this one over here, so between this level up here and this level up here, that is a zone, which I'll add in this rectangle just so it doesn't confuse you. And basically what we have now is from December the 4th, we have 1530 candle, 1500 hour candle, as well as the 045 level of demand. These are levels where price pushed up with high volume, as you can see. So now if we go back in time and have a look, zoom out a bit. Okay, yeah, we can do this. What we have here is supply zone number 1, supply number 2, supply zone number 3, demand zone number 1, and demand zone number 2, and demand number 3 at the bottom over here. Obviously, we'll just focus on the most recent levels that we have over here. So these will be the levels that we'll focus on for Aussie dollar over here. Okay, so this is AUD USD. And And these are the levels that will be of focus as well. Okay, so perfect. AUD USD. Right, the next one we're going to move over to is Euro USD. Okay, so Euro USD will be the next symbol of focus. So Euro USD, we're going to go from M15 to the 4-hour time frame. So 4-hour time frame, identify potential supply and demand levels. The first one being a potential demand level over here, where price pushed up with high volume. This is December 15, 1600 hour candle. And then supply. Supply will need to go a little bit further here, which if I go back in time here, looks like, there we go. The next potential zone here is around this area here, which is this level here where price pushed down with high volume. And this is around October the 1st, 8 a.m. candle on the 4 hours. This will be potential supply, and this here will be potential demand, December 15. And then I'll switch to the 15-minute time frame on M15. So M15 on December 15, we're going to draw the levels now, which I see. Let's see if these clues are still relevant. This is not relevant anymore. This one here is still relevant down here. This one up here also still relevant. We've got another clue here, no longer relevant. This one down here is still relevant. This one over here, we'll have a look at. This one over there. This one over there, not relevant anymore. And then this one over here, and this one over there, not relevant anymore. So here's the first one I can see. Next one is this one up here, which is a supply level. Then this one down here. And this one over here, which looks like a zone actually. So this one here. No, not this one. No, it's this one down here. Okay, this one is the relevant one. And then these other ones over here, no longer relevant. So I'll delete this one. Then to look again at this one. Yeah, delete this one. Okay, so basically between this level here and this level over here is an actual zone. Okay. Right, so this one here is a zone, so it'll be the zone that you can see there. And then basically what we have here is December 15th. We've got 2145, 1715, 1000, 815, and 245 candles. We have a demand level, a supply level, and a demand zone over here. Okay, so the demand is fine. The next thing I want to check for is the supply, which again, we'll need to go all the way back to October, which we identified. on the 4-hour time frame. So now on the N15 time frame, we're going to go to October, which is October the 1st, as you can see over here. And we're looking to see if there is relevant levels where price pushed down with high volume, and it's a level over here which is no longer relevant. This one over here, not relevant anymore. This one over here, which is no longer relevant. Then we've got the one next to it over there, which is a level that is relevant still. Okay, so that is October the 1st, 9:45 candle with price pushed up with high volume. What I will do though is I'm going to go a little bit higher here, and I'll zoom out a bit and see if there's any other level that we can identify since we are here where price pushed down with high volume. And it seems we do have a level here on September 24th where price pushed down with high volume over there, as well as over here and over here. There's actually more levels here as well, but again, what I will do is I'll just focus on the more relevant levels. Okay, so I'll just do the most recent one. So it's this one over here, which seems to be part of zone. So this is a zone here. It's also part of the zone. So it's that part over there, pretty much in the same area. Then we've got this level over here as well. Let me just add these ones in as well since we're here. Also part of the zone. Okay, so the ones that I'm not using, I'll delete. So delete this one. And all right, so now what we have here is September 24, 0:30, 300, 8:45, 1000, 10:30, 1100 hour candle where price pushed down with high volume, where the first part here is a little zone, which I'll add in. Again, not to confuse you. And the next one I'll add is the zone from up here as well, where price pushed down with high volume. Okay, so that is Euro USD. Now if we go and look at what's happening currently, so basically if I zoom out a bit so you can see, well, let me zoom in first. We've got supply number 1 over here, supply number 2, supply zone number 3, supply number 4 all the way at the top, and supply zone number 5. Okay, quite a lot of levels. Then we've got demand 1 and demand zone number 2 over there. Again, what we're going to focus on is basically just our most recent levels that we can see over here. So this is Euro USD and the levels that we are going to focus on for today's session. Okay, Euro USD. This is it. Okay, I'll give you guys a minute to have a look at the chart before I move on to the next one. Right, so next one we're going to move on to is GBP USD. So we're going to switch from HM15 to H4 to identify potential levels. And what I see here, so this one looks like a supply level that price broke through. This one over here looks like a potential demand level here. And then supply we do have the level over here where price pushed down with high volume, although it seems price may have broken above that level. So in case price has broken above that level, let me identify the next one, which will be around, as we can see, October 17th. Well, first let me start with October 20th. There could be a level over here. So October 20th, where price pushed down with high volume, 8 a.m. candle. Then we've got another potential supply here, December 11, 1600 hour, and potential demand, December 12, 1600 hour over here, where price pushed up with high volume. This is on the 4-hour time frame. Now I'm going to switch to M15, where I'm going to draw these levels. Okay, and before I go to December 12, let me see if there's any clues here on December 15, which actually there is a few clues I can see here. I see a clue over here and over here. Another one down here. And let's see if there's another one over here. Okay, no. So I see this one here, which is the one that is still relevant. And then these ones over here are pretty much no longer relevant. So I'll delete this one and delete this one and this one. So basically December 15, 7:30 candle where price pushed up with high volume. Then if we now go to December 12th, see if there's any additional clues here. So there's more clues over here. This one's not relevant. This one over here still relevant. This one over here as well, still relevant it seems. So we've got this one here. Again, pretty much in the same area. So basically we have like a little zone over there on December the 12th. Okay, so December 12th, 1800 hour and 1830 candle where price pushed up with high volume. And I'll draw this box in just so you can see the zone itself. Right, now moving along, what we're going to go to here is we're going to look at the supply, which we've got one potential here on December 11th. So I'm going to zoom in here to December 11th, have a look if there's any clues I see here. This level over here, which seems to be still relevant, and then this level over here, which is no longer relevant over there. So delete this one. Then I'm going to add this one in over here. Then have a look. It's still relevant. And yeah, price is testing it right now. So this is December 11, 1900 hour candle, but it seems though prices continue to push up. So let's look at where the next supply level is, which we identified was around October the 20th. Okay, so October 20th. Again, here we are. Now let's see if there's any clues here. So there's this clue here, not relevant anymore. This clue here, which is relevant still. Okay, so I'm going to do this, move it out the way. Put this one in here. So that's still relevant. We have this one over here. Which is a zone here, pretty much in the same area. So that's like our little zone that we have over there. See if there's any other clues. We'll go to October 17th. And the next clue is all the way up here. So I'm going to delete this horizontal line, put this one in. Then again, we've got this zone over here, which I'll draw in for you. just so you're not confused. All right, so we have October 20th, 7:45, 900-hour candle, and October 17th, 1000-hour candle, where price pushed down with high volume over here and here as well. So now, if we go back here and have a look, which as we can see over here, and zoom out a bit so we can see, there we go. So we've got supply number 1 over here, supply zone number 2, and then demand supply number 3, and then demand number 1, all the way at the bottom over here. And this is on GBP USD. Okay, so these are the levels that we'll focus on for GBP USD for the session today. I'll give you a few seconds to have a look at the chart as well. Okay, so this is GBP USD, the levels that we're going to focus on for today. Okay, next chart we'll look at is NZD USD. So NZD USD on M15, I'm going to switch to the 4-hour to identify potential supply and demand levels. First one being this level over here, where price pushed down with high volume, being a potential supply. December 15, 1600-hour candle. And then demand will be potentially this level over here around December 8th, 1600-hour candle, where it seems price pushed up with higher volume after consolidating a bit here. Okay, so those will be the potential levels I'm going to look at. All right, so we're going to go to M15 now, starting with December 15, and we're going to draw levels where there's the first clue here, the next clue over here, another clue over here, which could still be relevant, and then this one over here, which is still relevant as well, and this one over here, no longer relevant. So I'll delete this one. Actually, there's more clues over here, but those clues don't seem to be relevant anymore, except for this one up here, and this one over here as well. Okay, there's actually quite a few that I need to look into before I can decide. Okay, starting with December 15, so there's a level over there. This level here. Next level is this one here, which is pretty much the same over here. So I'll use this one over here as the zone. Delete this one. Then the next one is this one up here. Then the next one is this one here, which also seems to be a zone as well. This one in the same area, so that's fine. This one as well. This one in the same area as well. And this one pretty much all in the same area. So I'll just leave this so I can remember. Right, so basically we have a zone from here to here, as we can see. So I'll add in my rectangle there, just so you can see. And then we've got the other zone down here. Okay. Basically, what we have here is we've got December 15, 1830, 1615, 400 hour, and then December 12th, we've got 1630, 1400, 1000, 800, 730, and 230, which are our levels of supply. Now for demand, let's add this in. We're going to go to where we identified, which was December 8th, if I'm not mistaken. Right, so December the 8th. And we'll have a look here and see if there's any clues that we have here. There are clues, but they are no longer relevant. Okay, I have to go all the way now down to December the 5th. Here, where price pushed up with high volume. And this level over here, what I will do is I'll add this one in, as well as this one. I just want to see how price reacted to this part over here. Okay, so first one we can delete. Second one is still relevant over here, which is basically December the 5th, 030 candle where price pushed up with high volume over there. But I will continue to look here, and the next levels I see is December the 3rd. There's a level over here, a level over there, this one over here, this one over here, this one down here, and this one here, this one down here as well. So let's see which one is still relevant. So this one over here is still relevant, this one here is still relevant, and this one over here not relevant anymore. Then we've got this one here, which seems like the zone here. So it's basically between here and here's the zone, which is over here, and the next one over there. So it's part of the zone, as we can see. And I'll just focus on those ones for now. So basically between here and between up here is the zone. Right, so we have December 8th, 1700, 1630, 230, 200, and December 2nd, 2345 candle, all levels where price pushed up with high volume. So now if we go and look, what we can see here is we've got supply zone 1, supply 2, supply zone number 3, and then demand 1, demand 2, and demand zone number 3 at the bottom over there. Okay, so these will be the levels of focus for NZD USD for the session today. I'll give you a few seconds to have a look at the levels as well on your side. Okay, NZD USD. Perfect. Next is going to be USD CAD. So dollar CAD. Switch to the 4-hour here. Identify potential levels. So we've got a potential, looks like a potential demand zone over here between December 15, 1600-hour candle and December 12, 1600-hour candle, where price, even though it's consolidating, has slightly pushed up from that level. Okay, then supply, looks like we've got a level over here as well. December 11, 1600-hour candle, where price pushed down with high volume. Okay, so these will be the first levels I'm going to look at here from the 4-hour chart, and then I'm going to go to M15 and draw the levels using our clues again. So December 15, we've got this clue over here, which is not relevant anymore. This one over here is still relevant. This one over here, this one over here, Okay, and then this one down here, not relevant anymore. So basically, I've got this first level here, which is actually a supply level. This level here, demand level. This level over here, which is a zone. That one not relevant anymore. And then this one down here. So then this one here, not relevant anymore. So basically, we've got a little zone over here on December 15. And basically, what we have here is December 15, 2030 candle, 1745, 1715, and then 1500 hour candle, where we've got here where price pushed up with high volume, the zone where price pushed up with high volume, and then the zone over here where price pushed down with high volume. Okay, so that is the demand. Now for supply, we did identify another level, which is over here, December 11th. What we're looking for is areas where price pushed down with high volume. So this level over here, that's still relevant. This one over here and over here as well, which is pretty much the zone. Okay. See if there's any more clues, and there's this big clue over here, which is the next most relevant level. Right. So first, let me add this in so you can see, and you're not confused. Okay. So December 11, we have the 1530 candle, 1445, 1430, as well as the 1000 hour candle. And these are levels where price pushed down with high volume and pushed down with high volume over here. Right. So now if we go to the current price action, what we can see is these are going to be the levels that we're going to be focusing for today's session for USD CAD, where we've got supply 1 here, supply 2, supply zone number 3, demand zone number 1, demand number 2. Okay, so these will be the levels of focus for dollar CAD today. I'll give you a few seconds to have a look at these levels on your side as well. Okay, this is USD CAD. Next, symbol I'm going to look at is USD CHF, so dollar Swiss. So USD CHF, we're going to go to the 4 hour here. And identify potential levels where I see this one here, not really clear, December 15, 1600 hour candle. It actually looks like a supply level where price pushed down slightly from there. And then demand, we can use this one down here, which is December 11, 1600 hour candle where price pushed up with high volume. So this is USD CHF on the 4 hour time frame. Potential demand, potential supply. Then I switch to the 15-minute chart. Then I'm going to again draw the levels now using the clues that we can see here on M15. I see this first clue over here, not relevant anymore. This one down here, this one down here, not relevant anymore. Then if there's anything else I can see up here, nope. So delete that. This is the only one I have here. Is this level on December 15th, which is on the 1715 candle, where price pushed up with high volume. Okay, so let me do this. Seems to be another clue below here, which I can have a look at. So I'm just going to shift the chart slightly back in time and see if there's any additional clues, which there seems to be an additional clue over here where price pushed up with high volume. And yeah, that's the only clue for now. It's on this level over here. So this is December 12th, 030 candle. That's the next demand. Now for supply, I'm just going to bring this up here so I can see. When we go back to December 12th, I see a clue over here where price pushed on with high volume, no longer relevant anymore. The next clue is going to be this one over here, this one over here, and this one over here. Those are areas where price pushed down volume, and this level over here as well. So this is the first one. Next one here, this one over here, and then this one over here, which is pretty much part of the zone. So I'll delete this one, and I'll just add in a rectangle so you can see that that area is the zone. Then we have, delete this. So now we have on December 11, we have 1300 hour candle, 1130 candle, 1000 hour candle, and 300 hour candle. These are areas where price pushed down with high volume. So now if I look at what's happening right now currently, if I zoom out a bit, as you can see, we've got supply number 1, supply zone number 2, demand number 1, and demand number 2 at the bottom over there. So these will be the levels of focus for the session today in terms of USD CHF dollar Swiss. I'll give you a minute to have a look at the levels on your side as well. Okay, so that's USD CHF. Yeah, USD CHF. Next one we're going to move on to is USD JPY, dollar yen. This is where, and now we're on the 15-minute time frame. We're going to switch to the 4-hour to identify potential supply and demand levels, with the first one being December 15, 1600 hour, with price pushed down with high volume. And then demand will be this one over here, December the 5th, 8 a.m. candle, with price pushed up with high volume. That will be our potential demand. Right. So potential demand, potential supply identified on the 4-hour. Now we switch to 15-minute. We're going to draw the levels using the clues that we can see here. So the first one I see is a clue here, which is still relevant, and this clue here as well. Then there's this one up here, no longer relevant anymore. And this one as well, no longer relevant. Okay, basically these spikes here are no longer relevant, except for this one all the way up here, this one up here, this one up here as well. Okay, so now if we look, there's this level here, which is a zone, this level there, and these two levels up here, which is another zone as well. So this here will be a zone. I'll add in a rectangle. not to confuse you. Then we've got this zone up here, add in another rectangle, again, not to confuse. Right, so December 15, we've got 23:45, 21:45, 4:30, 2:45, and 2 a.m. candle. These are all levels where price pushed down with high volume. Now, for demand, we did identify a level from the 4-hour, which is still here. Which, if I put in this line, just to make sure, yeah, the next level will be this one over here, which we identified from here, which is around December the 5th. So now December the 5th, using the clues we can see on M15, there's a clue here, still relevant. There's this one here. Let's have a look here quick. So it's this one here. Yeah, so that's the one. This one's not relevant anymore. If I look down here, yep, not relevant. So this will be the next level here, which is December the 5th, 1000-hour candle, the price pushed up with high volume. So that's going to be the next level. I'm going to add this in here and see, just in case, if I zoom out a bit, see if there's any other levels. Seems to be here, which is around November 14th. These are the next levels where price pushed up with high volume. So November 14, we've got 1630 candle and 1500-hour candle. Okay, that's just in case. So now if we go back in time and have a look, I'm going to zoom out a bit. We've got supply zone 1, supply number 2, supply zone number 3, then we've got demand number 1, demand number 2 over there, and then demand number 3 as well down here. Okay, so we zoom in a bit. The levels we'll focus on will be these ones over here. Okay, so these are the levels of focus for today on USD JPY. So take a look for yourself. I'll give you a few seconds to do so, to check the relevant levels on your side as well. This is for USD JPY. Okay, USD JPY. The next one we're going to move on to now is gold. So XAU USD. In the 15-minute chart here, I'm going to zoom out, go to H4 for our identify potential supply and demand levels. First one I see here, potential supply, December 15, 1700-hour candle, the price pushed down with high volume. And then demand will be this level here, December 11, 1700-hour candle, the price pushed up with high volume. So this will be the potential demand and supply identified from the 4-hour. Then switch to 15-minute time frame. So M15. What we'll do here is draw the levels now using our clues, where we have the first clue here, which is still relevant. A second clue over here as well, which is in the zone, same zone. Got another clue over here, this clue over here, this one here, and this one up here. Then we do have others which is this one here. This one's no longer relevant anymore. See if there's any other clues here. There's this one here, which is part of the zone. This one as well, not relevant anymore. Then if I look at the clues here, there's this one over here, which is no longer relevant. And this one over here, no longer relevant as well. Right, so here's the first level over there, second one over there, next one over there, this one here, and this one up here, and this one up here. Okay, so quite a few levels where the first three, as you can see, is part of a zone. So I'll add the rectangle there, just so you're not confused. And then basically what we have here is December 15, 2215, 2100, 1800, 1630, 1545, and 1500 hour candles. All are levels where price pushed down with high volume. Okay, now for demand, will be this one here. So for demand, we need to go all the way demand. Actually see something here, which will be around December the 12th. I just want to have a look here and see. Yeah, so it's actually December the 12th. There's a few clues here where price over here, and then there's this one over here, December 11th. So let's start with this one here first. So it's this one, then this one, and then this one, which is part of the zone, and this one as well, also part of the zone. So this one over here. Then if I continue here, there's this one as well. Okay. Then there's this level here, and this level here. Okay. And then this one all the way down here as well. Okay, so I'm seeing quite a lot here. So, okay, so these ones are still relevant. I'm going to delete this line over here. Okay, so we've got these two here. Over here, it's this level here, which is the zone. Add this rectangle in. Okay, it's a big zone there, and then got other levels down here. So basically, we have December the 12th, 730 candle, 400 hour, 300 hour candle. Then December 11th, we've got 2100, 1845, 1645, 1630, and 1500 hour candles. All are levels where price pushed up with high volume. Okay, so the levels here we have now on gold, XAU USD, we've got supply zone number 1 here at the top, supply 2, 3, and 4, demand zone number 1, demand 2, 3, and 4 as well, all the way at the bottom over there. Okay, so these will be the levels of focus for gold in today's session. Okay, I'll give you a few seconds to have a look on your side as well. Okay. So next here we've got US oil, WTI crude oil. So WTI crude oil, I'm going to switch to the 4-hour chart here. Then identify potential levels. We've got a potential supply here on 15 December, 1700-hour candle, where price pushed down with high volume. And then demand, we need to go back in time a bit. And if I zoom out here and have a look, the next potential level is all the way down here around May the 5th, 1 a.m. candle 2025. This is where price pushed up with high volume. Okay, so all the way the 5th of May. So go back, start with December 15th. We'll go to the 15-minute time frame, draw in our levels with our clues here, which is the clue I see over here, another clue I see over here, this one over here, which is no longer relevant, this one here and here. Then we've got this one over here, these two over here, another one up here. So there's quite a lot of zones here. I'll focus on the more recent ones only. So I'll start with this one here. So that's the first one. Next one over here, which is part of the zone. Over there, next one up here, this one up here, and then this one here. This one here as well. And this one here, pretty much, this is a zone as well. And this one here, in the same area, so I'll leave that one out. And then this one up here. Okay, I'm not gonna draw all of them, just don't want to confuse you. So the first one I'll add is this zone over here. The next one will be this zone here. Then the next one will be this zone over here, between here and here. Right. Then the others I will leave for now. Okay, we'll just focus on the most recent levels. Okay, all the way up here. So the ones we'll focus on here will be December 15, 2345, 2115, 1800, 1745, 1630, 1600, 1545, 1500, and then 1330. These are all levels where price pushed down with high volume. Okay. There's more up here, but we'll leave them for now. So now what we're going to look at is the demand level, which we said was around May the 5th. So I'm going to scroll all the way to May 5th on the chart. Hopefully we can go there. Yes, we can. So here we are, all the way May the 5th. Okay, so May the 5th. Let's see what we can see here. So I see this clue here, not relevant anymore. There's this clue over here. The price pushed up with high volume. So we'll focus on this one and see if it's still relevant right now. So I'm going to go back here and have a look. Okay, as you can see, is not relevant. Price broke through that level. So I'm going to go back there. May the 5th, delete that level. It's not relevant anymore. So we need to look at the levels below here, which if I zoom back in time, looks like I want to go further back in time here. And as I can see, I can go all the way down here to April. And here I see April the 9th. And there's quite a few levels here. There's this level here. This one here, which is no longer relevant. But this level here on April the 9th, where price pushed up with high volume. This is April 9th, 1600 hour candle there. Now if I go back and look, I can still see this level is no longer relevant. So I'm going to go back. And now basically what I'm going to do is I'm going to go over there, delete this trend line, delete this one. I'm going to go back to the 4-hour time frame. And as you can see, we're in April over here, which is no longer relevant. I need to have a look and see where's the next potential level here. If I zoom out and see, now as you can see, if I zoom out here on the 4-hour, I don't see any levels, but I can find potential supply areas, demand areas in. So what this is going to force me to do is I'm going to go to the daily chart. Basically on the daily chart, what I'm now going to focus on are support levels. Okay, I'm going to use my daily chart, support and resistance to help me to plot where the next areas are at over here. So if I go back in time and have a look, I can see here the next potential areas is going to be all the way over here. This previous resistance turned broken, now turned to support from January the 13th, 2021. Okay, using my line chart to help me to identify. So that's going to be, if I go back quickly, it'll be the zone here. So previous resistance, support, and the next support down over here. So now if I go back in time and have a look, the next potential low over here will be the 53.69 or the 53.70 area on US oil. That will be a support area, not a demand area, but a support area. Okay, so US oil 53.69, which is a support area from the daily chart, we'll use as the next most relevant level to look at for charting over here. So now if I go back to M15 and have a look here, basically what we have is supply zone 1, supply zone 2, supply zone 3, and then supply number 4 over here, which will be the areas where price pushed down with high volume. Okay. Now, since there is no demand, the next level below will be the support area over here, which is at the 53.69, 53.70 area on US oil. Okay, so basically we just have our supply all the way up here. So basically this will be the levels we'll focus on for US oil for today. Okay, so I'll give you guys some time to look at this on your chart. Then we'll move on to the next symbol. Okay, next we're going to look at is US 500, which is S&P 500. So S&P 500, US 500. We're going to switch to the 4-hour time frame, identify potential supply and demand levels. First level I see here is a potential supply, where price pushed down with high volume, December 15, 1700-hour candle. Then demand will be this area over here, November 26, 1700-hour candle, where price pushed up with high volume. So potential demand, potential supply over here from the 4-hour time frame. Switch to M15 and draw levels using our clues. I see a clue over here, another clue up here. This clue not relevant, this one not relevant anymore, and potentially another clue all the way up here. Okay, so first one is this one over here. There we go. Next one up here. And then the next one is all the way up here. There is more over here, this one here, which is no longer relevant. And there's this one all the way up here. I want to see if it's a zone or not. So I'll draw that in. That is the next zone. And then this one up here, which is not relevant. And then this one up here. That is part of the zone. Okay, so okay, add the rectangle in here, just so there's no confusion. And basically what we have, if we go back now, is we have December 15, 2245 and 1630 candle, both levels where price pushed down with high volume. Then December 12th, we've got 1630, 1100, 1000. And December 11th, we've got 2315. These are levels where price pushed up with high volume, which creates a zone over here. Okay, so that is all levels where price pushed down with high volume. Now for demand, we need to go back now and identify, go back to the level which we identified on the 4-hour, which was around the area of the November 26. So November 26 now. Okay, have a look and see. There's this level over here. I don't know if it's relevant still. What I'll do is I'll add this in. Let me add this in just so I can see. And see here. This could still be relevant. Yes, it is. Since price had tested that level. So let's go back now to that area and see what else we have. So there's this area over here. There's another clue here, which is in the same zone. This clue over here, not relevant anymore. This clue over here, which is in the same area. This clue here, which is slightly below, but in the same area. Then we've got this one down here. And then this one down here. And then this one. Up here. This one's not relevant anymore. Then I see this here, not relevant. This one here, not relevant. I see this one all the way down here, which is still relevant. Okay, so this down here is between here and here. Okay. Between this one down here and this one here. I'll add in the rectangle just so you can see. There we go. So basically we've got November 26, 1400 hour candle, 200 hour, and 145. Then if we continue all the way down to November 24th, that's going to be the next level. This is the level where price pushed up with high volume. November 24, 11:15 candle. Okay. All right. So now, if we go back, have a look. What do we see here? We've got supply number 1, supply number 2, supply number 3, supply zone number 4, demand 1, and then demand zone number 2 just below. Okay. So this is S&P 500, US 500. These will be the levels of focus for the session today. Give you a few seconds to have a look on your side. Then we'll move on to the next one. Okay. Next one we have is the US 30, which is Dow Jones. US 30 Dow Jones, M15. We're going to switch to the 4-hour chart. Identify potential supply and demand levels, starting with the supply over here from December 15, 1700 hour candle, where price pushed down with high volume, and then demand, we've got this level over here, December 11th, 1500 hour candle, where price pushed up with high volume. So potential demand, potential supply over here on US 30 Dow Jones on the 4-hour. Switch to the 15-minute chart to draw our levels in using our clues. We've got the first level here, which is a clue still. Second level over here, still relevant. And then pretty much this level over here. And this level over here. Okay, so December 15, we've got this level here, which, as you can see here, is no longer relevant. So not going to use that one anymore. Delete this one, this one. So the next level we have is this one over there. Okay, which December 15th is the 1630 candle where price pushed down with high volume. Then we go to December the 12th. There's this level here. This level here and here. All in the same area as this one over here. So this one is going to be a little bit of a zone. I think I missed this one up here. Okay, which is all part of the zone over there. So basically from here all the way up here is a zone, and this is December the 12th, which are the candles from the 1630, 1445, 1400, 1100 hour, and 1000 hour candle with price pushed down with high volume. This is the zone. Then for demand, we have a level here, December 11th, where price pushed up with high volume here. So it's this level over there. Another one down here, where price pushed up with high volume. Another one here, which is not relevant anymore. Then if I go slightly further back, Next one is this one down here. So it's this one here, and this one down here. Yeah. So December 11, 1630 candle, 1000 hour candle, December the 10th, 1630 candle. All are areas where price pushed up with high volume. So now if we go here and have a look, the levels we have here is supply 1, supply zone number 2, demand 1, and demand number 2 and demand number 3. These are going to be the areas of focus for US 30 for today's session. I'll give you a few seconds to have a look before we move on to the next one. So again, this is US 30 Dow Jones. Then the next one we have, last symbol of analysis, will be UT100, which is the NASDAQ. So switch from M15 to the 4-hour time frame. Starting with December 15th, 1700 hour candle, with price pushed down with high volume, giving us a potential supply level. And then demand will be this level down here. November 25th, where price pushed up with high volume, 1700 hour candle, potential demand. And we switch to the 15-minute chart, starting with December 15. First clue is this one here. Second clue is this one over here. Then the next clue is this one over here. Okay. Right. So here's the first one, the second one, the third one, and fourth one and fifth one, pretty much in the same zone over there. And then this one over here, no, not relevant. And then we've got this one up here, this one and this one in the same area, this one in the same area, and this one in the pretty much in the same zone. So we'll delete this one. So basically, we've got this small zone over here and this small zone over here as well. Okay, so what we have here is December 15. We've got 2245, 1645, 1630. December 12, 1645, 1630, 1100, 1000, 245, and 200 hour candle. All our supply levels were price pushed down with high volume. Now for demand, we need to go where we identified the level on the 4-hour, which was around November 25th. So November 25th, we're going to have a look here and see where the next potential levels are, which I can see. The next level I can see for the NASDAQ was all the way over here, which this level is not relevant anymore. So I think The next one is not over here. So I'm going to go all the way down here, delete this one, and delete this. I'm going to go back to the 4-hour and have a look where the next potential supply is. So I want to do one thing though, is I'm going to go back here to November 25th on the 15-minute chart. I want to have a look quick and see if I switch from here to here, if I see anything different. Yeah, I don't see anything over there. So I'll go all the way back to the 4-hour, and the next potential level then will be around here, which is September the 10th, 1700-hour candle. So I'm going to go to 15-minute chart, go to September the 10th. Now we'll have a look and see the next level is this one over here, where price pushed up with high volume. And this is September the 10th, 2245 candle. And then that's in the same area. Yeah, so I'll just focus on that one for now. So NASDAQ, UT 100. If we go here and have a look now, I'm going to zoom out so you can see. We've got supply 1, supply 2, supply 3, supply zone number 4, supply zone number 5, and then demand all the way down here. Okay, so the levels of focus for today's session will be these ones over here on UT 100, which is NASDAQ. Okay, there we go. I'll give you a few seconds to have a look. And this is the last symbol of analysis. What I will do though is I'll quickly go through the symbols we've covered. Before I start analyzing, looking for confirmation of entry. So we've got UT 100, which is NASDAQ, US 30, Dow Jones, US 500, S&P 500, US oil, WTI crude oil, XAU USD, which is gold, then we've got USD JPY here, dollar yen, USD CHF, dollar Swiss, USD CAD, NZD USD, GBP USD, we've got Euro USD, and then we've got AUD USD. Okay, so these are the symbols for today's session. Okay, now what I'm going to do is I'm going to start analyzing and start looking for trades. Okay, the news will be released in about 29 minutes. So now the focus here is going to start looking for trading opportunities. Okay, so starting with AUD USD. That's going to be first one I'm going to analyze here. So AUD USD, what we have over here is price is currently in no man's land. So you can see from yesterday, price pushed down from our supply 1 and 2 here, came down to test our demand level. Price this morning bounced off the demand level, not supply level, my apologies. Okay, price bounced off the demand level over here and is currently in no man's land. Okay, there is an opportunity over here for potential buy setup if price can push below this fractal low over here. So if price can push below this fractal low, there is a potential buy opportunity. But for now, since price is in no man's land, rather wait for either price to come up and push up here to the supply level where we can look for selling opportunities, or as I said, for price to push below this fractal high over here where we can enter potential buys over there. But for now, since it's already moving and it's in no man's land, it's going to be a no trade for now on AUD USD. But definitely we'll keep an eye on this one. Throughout the session for potential trade setups. So this is AUD USD. All right. Now, the next symbol I'm going to look at will be Euro USD. So Euro USD, what we have here is supply 1 and 2. Price is broken through supply number 1, is now at supply number 2. So eyes are on supply number 2 over here. Okay. As we want to put and see, it's still breaking above supply number 2 here. So there's no clear confirmation of entry. So what I'd rather do is wait to see how price reacts to supply number 2 here. Or if price continues up, then we can look for potential selling opportunities at supply number 3. But for now, it's a no trade as yet, as there's no clear confirmation of entry, especially looking to sell at supply number 2 over here. So Euro USD is a no trade for now. Then next we have GBP USD, which is currently testing supply number 2, which is a high probability sell area. It's not giving a clear entry as yet, so we'll keep an eye on this one for potential entry Stop loss, we already have this fractal high above the supply zone number 2 here, but for entry, I'll have to wait and see. It should be around somewhere in this area over here, but we'll give it about 10 more minutes before we can confirm. But definitely what we have over here on GBP USD is we have price has pushed up since early this morning, basically inducing buyers in the market, amateur retail buying in the market. So we know there's buying pressure in the market, and we had a supply zone here, which is a high probability sell area from the smart money perspective. So definitely want to be looking for selling opportunities around this area as well. So GBP USD, we'll keep an eye on in the next 10 minutes. Next, we've got NZD USD. So NZD USD, we've got price currently in no man's land over here. We've got supply number 1. Price has been pushing down since late afternoon yesterday, pushed down, and then since early this morning, we have price rising back up, but now is currently in no man's land. So for clear trades up, we either want to see price high probability setup for price to come up, test the supply level over here, and then we can look to sell from there. Or if price pushes down, then we wait for price to come down to the demand level where we can look for buying opportunities. But for now, no traders yet since price is in no man's land. Next up is USD CAD, currently testing our demand zone over here, which is our high probability buy zone. So again, we do have an area where I can put my stop loss, but for entry, it's not confirmed as yet. We'll wait for this candle to close, and then we'll put in the order for USD CAD. So USD CAD, we'll keep it out again in the next 7 minutes. Definitely looking to buy in this area. So next up, we've got USD CHF, currently testing demand number 2 over here, which is our high probability buy zone. Okay. Okay. Right, high probability buy zone here. So definitely looking for buying opportunities. Stop loss area we have. Entry not clear as yet, so we'll keep an eye in the next 6 minutes to see if there's a clear entry to buy here. But definitely, as we can see, we've got retail selling from early this morning, inducing sellers in the market, and price currently at a high probability buy area, which is a smart money area to look for buying opportunities. So we'll keep an eye on this one for the next 6 minutes for potential entry. So we'll come back to this one. USD CAD, after that one, USD JPY, testing the demand level, which is a high probability buy area. So definitely we'll look for buying opportunities. No clear entry as yet, so I'll wait for 5 minutes before placing the entries. Gold is coming off our demand level over here. As you can see, price has been consolidating in our demand zone over here. We've got the top of the range over here and the bottom of the range over here. So this is clearly giving a buy opportunity that we could look for entry points on. Price has moved slightly away from there, but what I'm going to do is, I want to place my entry, as we'll see here, entry price, stop loss. I want to put, there we go, stop loss. I want it to be below the demand zone over here. So on this fractal low, below demand zone number 1, and the entry, if I can get just around here, around the 4,295 area. So if price can slightly push below, then I'll look to enter a buy trade over there on XAU USD. And then stop loss will be around 4,255. So that's what I'm going to be waiting for. But first, we need to see if price can push down slightly below into this ranging area to place the entry. So again, we'll wait 4 more minutes before we can confirm where we're going to place the trades. Okay. This is XAU USD gold. Okay. Next is going to be US oil, which, as you can see, price is currently in no man's land. As we explained earlier on, we have a support area at the bottom here, but price is coming down from our supply zone over here. So we know we've got selling induced into the market over here. There's no good area to enter the trade here. So what we want to do is, since it's a no man's land, rather wait for a high probability setup, which the most high probability setup we could do right now is if price pushes up into supply zone over there, and then we can look to sell from the area. But for now, since price is a no man's land, that's going to be a no trade for now. Okay. That's WTI crude oil, US oil. Next, we've got S&P 500, which is currently testing our supply level over there, which is a high probability setup. As we can see, we've got already buying induced in the market since early on this morning. So then we've got amateur retail buying into our high probability sell area. So this is a trade that I want to look at placing already. So this is going to be a sell trade for me, a sell stop order with my stop loss. I'll put it over here. Now I'll put it on this fractal high, slightly above the supply level, and then the entry price will be this fractal low over here, which is the fractal low, first fractal low off the supply level over there. Okay, so entry is around the 6,798 level, and stop loss the 6,825 level on S&P 500. So that's going to be where I'm going to be looking to sell on S&P 500. Okay, so that's going to be the sell entry for me. Okay, S&P US 500. All right. Next is going to be Dow Jones US 30. So Dow Jones US 30. As you can see over there, price is currently in no man's land. Over there, it's a no man's land. Okay, so it's pretty much ranging in this area. So again, for a high probability setup, what I would rather wait for, let me see something here. Yeah, what I'd rather wait for, since price is in no man's land, I'd rather wait for price to either push up to the supply here, where we can look for selling opportunities up there, or to push down to the demand over here, where we can look for selling buying opportunities over there. But since price is currently in no man's land, that's going to be on a trade for me for now. We'll keep an eye on this one throughout the session. And then we've got NASDAQ. Okay, still in no man's land. Okay, approaching our supply level. So what I want to see here on NASDAQ is for price to push up, test the supply, touch the supply, and then we can start looking for selling opportunities down there. But again, no man's land, no trade for now. We'll keep an eye on this one throughout the session. Okay, so that's NASDAQ. So we'll continue. Look for the next trades, which I see here. So gold is pushing into our level over there. So what I'm going to do is I'm going to place this order as I wanted, which is entry price at 4,294 buy stop, and stop loss 4,255. Okay, so price is at the entry there, so I might have to place a at market order. So yeah, can't place the order there, so I have to change it to an at market order since it's at the entry price which I want to enter. Stop loss still the same, 4,255. Entry price at market. Obviously, volume is based on risk management, and then I'm going to enter in over there on gold. So I'm entering a buy trade on gold. Okay. Next, we've got AUD USD. Still not happy with this one, so we'll leave this one for now. Euro USD, testing the supply there. So yeah, what I can do here is I can place a sell stop order with my stop loss on the most recent fractal high, entry price on the candle with the volume testing the supply level, which is this big candle over here, the low of that candle. So basically entry is at around the 1.1765 and stop loss is 1.1780 on Euro USD is where I'm looking to enter a sell stop order. All right, that's Euro USD. Next is GBP USD. Delete this one. Okay, GBP USD is giving me a trade setup that I want, which is a sell entry order, sell stop order. Since price is testing supply zone number 2. So how this one is going to work is entry price will be on the most recent fractal low that's just formed over here. And then stop loss is going to be the fractal high above the supply zone over here, which is this fractal high all the way up here. So basically, if I have a look here, entry price, this is a sell stop order. Yep, this is a sell stop order. Entry price over there. Okay, so and then stop loss over there. Right. So entry will be around 1.3425 and stop loss 1.3441 on GBP USD sell stop order. Okay. That's GBP USD looking to sell. Next is NZD USD. Still in no man's land there. No trade setup as yet. Okay, dollar Swiss is a buy setup. So with this one, I'm going to place a buy here, buy stop order. with the stop loss on the fractal low below demand number 2, this fractal low here, and entry price on the high of this candle coming down into the demand level. Okay, giving us about 13 pip entry to stop range. So entry is around 0.7948, stop loss is around 0.7937 on USD CHF. Okay, and then next is going to be USD CAD, which as you can see is still pushing lower here, breaking below demand number 1. So just have to wait and see. If price continues to push down into demand number 2, then we can look for potential buying opportunities over there. But for now, no trade on dollar CAD. USD JPY is giving a trade setup here, which I will use in terms of entry price. We'll do this buy stop order, the high of this candle with the high volume into the demand level, and then the stop loss will be on the fractal low below the demand zone over there. So fractal low below demand zone over there. So basically we're looking at entry price buy stop at 154.72 and stop loss 154.30 on this buy stop order on USD JPY. Okay, that's USD JPY. Next is NASDAQ, UT100 still in no man's land, US 30 still in no man's land, S&P 500 testing the supply, still happy with that order, US oil still in no man's land, gold is pushed slightly up, okay, that's triggered already, it's pushed slightly up, so we'll have a look at that one. Yeah, so I'm pretty happy with the orders I have over here. So now I just have to wait and see how price plays out over there. Okay, so let's just have a look again and see if there's anything here. You can see dollar CAD is pushing down into demand number 2, so we'll keep on this one after the news is released. Got USD JPY there. Okay. All right, so we've got 4 minutes till the news is released. I'm just checking if there's any other orders I can place. Okay, nothing as yet, so that's fine. USD CHF. Okay, dollar CAD, definitely need to watch this one. So since it's pushing into demand number 2, what I'll do in the meantime is on USD CAD, identify the next demand level in case price pushes below there, which it seems, let me just go all the way back here to September 17th, where price pushed up with high volume. So we go there, M15, September 17th. Okay, with this level here, not relevant anymore. For this one down here, which is still relevant. This is September 16th, 2345 candle, where price pushed up with high volume. Then if price continues lower here, the next level is, as we can see around this area here, just no longer relevant. So if I go to the 4-hour and have a look, the next area to look at should be October the 7th, where price pushed up with high volume. October the 7th. So I'm going to go to M15, go to October the 7th, and have a look. Okay, so we do have a level here, October the 7th, where price pushed up with high volume over here and over here. It's for USD CAD. So October the 7th, we have 1100 hour candle and 1400 hour candle. Okay, so that's that on USD CAD. Now we go over here and have a look and see how prices are moving here. The market has moved up here already. Okay, so dollar is pushing down. USD JPY has activated. Okay, UT100, Nasdaq is pushing into the supply level here, so we'll keep out on this one. US30 is pushing up. US 500 is pushing up above supply 1. Gold is pushing up now, so that's that. It's in a little bit of a profit. Then, okay, Aussie dollar has now pushed into the supply area over here, where we can look for potential selling opportunities. Euro USD is pushing up. Okay. Same with GBP USD. Dollar Swiss is pushed below there. Yeah, dollar CAD is moving way down. Then we've got dollar yen pushing below. It has triggered as well. So the only two triggered trades we have is dollar yen and gold at the moment. Okay. GBP USD has it triggered. Okay. Right. So I'm going to keep an eye on Nasdaq, UT100, potential sell opportunities that are setting up over there. Okay, markets are moving though. So now it's just about seeing we can update our orders. So S&P 500, we might need to update this one. Gold is pushing into the supply, which is a high probability sell area. So we'll need to keep an eye on this one. We'll need to keep an eye on this one. Okay. All right. So all we can do now is we just need to wait for the 15-minute candle to close. We can update our orders or monitor our open trades. Okay. So those are the setups for now. Everything moving okay. So in the meantime, while the market is setting up, what I'm going to do is I'll quickly go through and explain the 5-step strategy that I used to identify the opportunities in today's session. So what I'm going to do here is I'm going to share a different screen here. So we're going to go back here and as you can see, the 5-step strategy involves step 1, which is identifying levels. Step 2, drawing the levels, the high interest levels. Step 3, analyzing the price action. Step 4, looking for confirmation of entry. And then step number 5 is placing the trade. So breaking down the strategy step by step, we'll start with the first step, which is step number 1, identifying the levels. Basically, what this means is what you want to do in this process is what I did was I identified my potential supply on and demand levels on the 4-hour time frame using the Forex volume indicator to help me to identify high volume areas where there's a high probability where the smart money stepped into the market. Again, when I talk about supply, I'm talking about a horizontal price level where price went down with high volume, and that is going to be a high probability sell zone. Whereas a demand level is a horizontal price level where price goes up with high volume, and that is a high probability buy zone. So identifying potential supply and demand levels on the 4-hour time frame using Forex volume. Then once I did that, I went to step number 2, which is to draw the levels. And as you can see, I draw the levels on the 15-minute time frame, again using my Forex volume indicator to help me to identify the high volume spikes, which are high probability areas where the smart money stepped into the market. So step number 2 is to draw the levels on the 15-minute time frame. That is the second step of the process. Then once I've identified and I've drawn the levels on step number 2, then is where we go to step number 3, which is where the analysis comes into the picture. Again, as you can see, analysis of the price action is done on the 15-minute time frame. And again, I'm analyzing and looking at where the retail amateur traders are induced to be trading, and also looking at my supply and demand levels to see where the smart money are leaving clues as to what areas or what direction price is more than likely to be moving from. Again, always analyzing the most recent price action to look at what are the most current trade opportunities I can identify. And this is step 3 of this 5-step process. Then once that is done, we go to step number 4, which is looking for confirmation of entry. Again, what I'm looking for is I'm identifying which level of high interest price is currently testing, which is either the supply or the demand level. Where if price is currently testing the supply level, then I'm going to look for confirmation of entry to sell from the supply level, obviously down to the most recent demand. Whereas if price is currently testing the demand level, I'm going to be looking to buy from the demand up to the most recent supply. And this is basically supply and demand 101, where again, I sell at supply and buy at the demand level. Sell at supply, buy at the demand. So this is step number 4 of this process. Now, once I've looked for confirmation of entry and I've identified the confirmation of entry, I then move on to step number 5, which is to actually place the trade order. And I'm looking to place the trade order most preferably before the high impact news is released, so I can take advantage of the high volatility in the market. Okay, so taking advantage of that high volatility is important. So again, we have 3 order options that we can use. One of any of the 3 or a mixture of one of the 3, which is we can either use the most recent fractal high or low to look for our entry price and stop loss, or we can use, if price is moving in a range, the top of the range and the bottom of the range, sideways range high, sideways range low, to place the entry or the stop loss. Or if we're going to use a candlestick, we use the high and the low of the candlestick. So again, the key here is to use any one of the 3 options over there, which will give us the best opportunity to place confirmation of entry or to place the trade with the best place where we can place our stop loss outside of our supply or demand stop hunt areas, and entry price the most recent areas where we can catch the entry into the market over there. So again, when it comes to placing your trade, guys, remember risk management is very, very important. You always want to make sure that when you're placing your trade, you have a predetermined risk factor, which is you know how much of your account you're going to risk per single trade. And again, want to keep it consistent, because again, when you know where you're going to enter the market, we're going to exit the market with a loss, and we're going to exit the market with a profit. That will allow you to calculate your trade risk, your points at risk, which will then help you to calculate your volume, which will be the volume that you need to use for that specific trade to make sure that you never risk more than you want for that particular order. So risk management is very, 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 very important. Okay, so that is the 5-step process that I used to place and look for trade opportunities using the strategy. Now, I'm going to go back to the market quickly to see how the market is shaping up at the moment. We still need to wait for about 6 minutes for the market to close before we can look at placing some trade orders. But now you can see we've got some reversals in the market. What I'm going to do here is I'm going to delete this order in GBP USD. I'm going to update it. So I'm going to delete this one. And what I want to do now, since price is moving here, I want to update my sell order now, my sell stop order with my entry price stop loss on the high of this candle with the high volume. Entry price will be on still the fractal low over here, but we'll wait for the candle to close to confirm on GBP USD. But basically GBP USD, I'm looking at selling at entry price 1.3423, stop loss 1.3457. Okay, and this is on GBP USD. Okay, next is NZD USD. Now has moved up into our supply zone, as I have analyzed before. And now that, since that is shaping up, what I want to do now is I want to get ready to sell on Kiwi dollar. Stop loss I'm going to put on this fractal low above supply number 2. Fractal high above supply number 2, and entry price will most likely be the low of this candle over here once it closes. So entry is around 0.5784 and stop loss around 0.5810. But we'll wait for the market to close before we can place the trade. Next here is dollar Swiss. I'm going to delete this order. You can see it's triggered into the demand area over here, and I'm going to look at placing a buy order here, buy stop order. I'm going to set it up in the meantime. Entry price on the high of the candle over here with the high volume, and stop loss on the low of the candle over there with the high volume. Around 0.7945 is the entry, and 0.7925 is the stop loss. Okay. USD CAD. Okay, setting up as well. So get ready as well to place a potential trade order there. stop loss, entry. Entry will most likely be the high of the candle. Stop loss will be the low of the candle as well. Okay, but we'll wait for the market to close before we can do that. All right, dollar yen has now moved back up to around break even, back to entry here. So that's fine. Still happy with the order there. So leave that for now. And then NASDAQ, this one, I want to place a sell order. So I'm going to delete this since it's setting up the sell order with my sell stop. I want here, stop loss, I'm going to put on this fractal high over here, be above the supply level. And then the entry, I'm going to put on this low over here. This should be the fractal low once the market, this candle closes. But we'll wait for the candle to close before we can confirm. US 30 still in no man's land. So no trade for now. US 500, I'm going to update this one. So I'm going to delete this order. This pending order hasn't triggered yet. So delete that one. And then the entry will look like so for stop loss, sell stop, I mean. Entry price, stop loss will be on the high of the candle with the high volume here, the current candle. Entry price will be on this low over here, should be the fractal low. But we'll confirm that in about 2 minutes. So entry here on S&P 500 is 6,804, stop loss 6,830. US oil still in no man's land, no trade for now. Gold is moving up into the supply zone, so definitely keep an eye on this one. A little bit of a profit there. That's fine. And then Aussie dollar, the sell stop is setting up as well. So looking at entry for a sell stop here. Entry price or stop loss on the high of the candle, current candle with the high volume, and entry. I'll actually wait for this fractal over here. We'll see on the close of this candle, anything sets up. I'll actually may use the candle as well. So I'll think about it. Just wait for the market to close. I mean, for the candle to close before I can decide. Euro USD. Okay, this one. This one I want to update this one actually. It isn't slightly in a bit of a profit, but I want to delete this one. So I'm going to delete it at a little bit of a profit here because I want to update the order. I want to increase my stop loss a bit. So it's going to change my volume. So I'm going to delete that one at a little bit of a profit and set up my sell stop a little bit better here. So stop loss will be on the high of this candle. Entry will be on the low of the candle with the high volume over here, the current candle. So for euro dollar, I'm looking at my entry price, which is at 1.1761, and stop loss 1.1795 for a sell stop order on euro USD. Okay, so that's what I'm looking at now. Okay, so that's euro dollar. Sell stop, I'm going to enter now. There we go. So that's that. Again, looking to sell down to the demand level below over there. Obviously, the supply over there has been broken. Supply number 1 and 2. We're looking at supply zone number 3 over there. GBP USD. So entry for a sell stop is going to be the low of this candle, and then stop loss the high of the candle as well. So entry 1.3412, stop loss 1.3457 on GBP USD. Okay, there we go. That's GBP USD. Then next we have NZD USD. So stop loss high, no, fractal high over there. Entry price, I'm going to put on the low of the candle, not the fractal low, the low of the candle over here. So entry is 0.5782, stop loss 0.5811 on NZD USD. All right. Okay, dollar Swiss has already moved, missed that one, so that's fine. Entry should have been around here. Stop loss there. I'll keep it here and see if price pushes back below, then I'll enter. But entry, I'm looking at 0.7952 and stop loss 0.7924. But this one has already moved. I've missed this one, but I'll keep the order in ready just in case price pushes below, if it does. Okay, that's the thing. The market's moving quick, so we need to be very quick to respond here. Same with dollar CAD. I can still place a at market order here since price is around my entry price here. Stop loss the low of the candle. So stop loss is around 1.3736. And then this one I'll place at market order. Buy at market since it's at where I want to enter on USD CAD. So stop loss 1.3736 and entry price is the high of that candle over there. So there we go. Dollar CAD in over there. Okay. So that's dollar CAD in. Dollar yen is in a little bit of a profit though, still around entry, but triggered in the area I want. So I'm happy with that one. There is another trade here as well. If you've missed it, you can just use the high of this candle and the low of this candle to enter the trade. But yeah, that's USD JPY. So still happy with that one over there. Okay, next is NASDAQ UT100. Definitely want to sell there. The sell is setting up as well. So again, same thing, stop loss on the high of the candle there, which is the same as the fractal high over here, and then stop loss, most recent fractal low. So entry is 24,975, stop loss 25,119 on NASDAQ UT100. I'm going to place a sell stop order over there. Okay. Right. So submit and in there. Okay. So it's UT100. US30 still in no man's land, so no trade for now. US 500. Okay, I'm going to update the order now. So pretty much similar to NASDAQ. I've got stop loss on the high of this candle with the high volume. Entry on the most recent fractal low. So basically what I'm looking at there is entry price at entry price at 6,803 and stop loss on 6,830 on S&P 500. And this is a sell stop order. Okay. US 500, S&P 500. Oil, yep, it's pushing down. No trade there, so leave that for now. Gold is still pushing up, so that is fine. And then, AUD USD, sell stop here on, so this one I'm going to use the low of this candle, high of the candle, so entry 0.6634, stop loss 0.6661 on AUD USD. And it's a sell stop order. Okay, that's AUD USD. And then Euro dollar, fine. GBP USD, fine as well. USD CHF, just have to keep an eye on this one. And dollar CAD. Yeah, so those are the trades for the session today. Okay. Obviously, you want to keep an eye on your trade orders, make sure you manage your risk properly, and you manage your trades properly once the trades have triggered. Okay, so there we go. Now, we'll wait for 7 more minutes for final trades. But in the meantime, what I want to do is just bring your attention to, obviously, now that we've covered the 5 steps, is just bring your attention to CWG Markets Points More program, which is a Points More program is a reward system, which for every trade that you place as normal on your trading account, you earn points through your CWG trading account. And once you collect enough points, you can exchange them for gifts in the CWG Points More for things like the latest smartphones, laptops, accessories, and you can have these items delivered to you directly at no additional cost. So you simply earn points by trading as normal, no hidden fees or charges involved. It's just a reward system for being a member of CWG Markets. Okay, so for those of you who don't have an account or haven't traded as yet on your account, CWG Points More is offering basically an opportunity to double your points for your first week of trading on your account. So if you haven't traded on your account and you want to find your account and start trading this week or start trading today, you can double your points for the first week of your trading, so that can help you to earn more points and get you closer to the gifts that you want to get in the Points More that you can redeem once you've achieved the correct amount of points. Okay, so this just brings you to your attention. We've also got our CWG Cent account, which will allow you to, as low as a deposit of $10, allow you to get access to trading through MT5, allow you with a leverage of 1:1,000 to actually start trading and taking advantage of the moves that are happening in the market. So with $10, you can still get access to a high leverage multi-asset trading account with CWG Markets as well. So again, make sure you start trading with CWG Markets today, as well as just to bring you attention again, reminder for the welcome bonus. There's a 100% welcome bonus, which will allow you to double your deposit and increase your equity and allow you to have more margin and allow you to grow your account in the most efficient way possible. So you get to double your deposit up to $1,000. So every deposit you put up to $1,000, you'll get 100% deposit on that and 100% bonus as well. So you've got more capital to trade with. All right. And then for those of you that have made it this far, we do offer one-on-one coaching at CWG Markets, where trading with CWG Markets will get you access to daily market tips and analysis through our Telegram channel. You'll also get access to our knowledge building sessions, where we can help you to upskill yourself with your trading knowledge, as well as access to live trading sessions like the session today. Get access to trading sessions from expert-led coaching, an expert team of traders at CWG Markets, as well as access to get assistance with creating and developing your own uniquely guided trading plan. And then obviously getting access to trade with an account that meets your needs, as well as obviously access to the CWG points ball program. So this is part of trading with CWG markets, and this is the benefits you get when trading with CWG. Now, for those of you who want to get a 30-minute coaching session with myself, what you can do is simply send an email, or you can use a link over there to send me a direct message on WhatsApp to get access to a free 30-minute coaching session. You just use the word coaching 30, so I know that you're from the coaching session and you're from the trading session from today. And that will allow you to help me to set you up with a 30-minute coaching session where I'll be able to help you with any trading related questions, or help you with showing you how you can develop your own trading plan as well. Okay. But in the meantime, what I'm going to do is I'm going to go back to the chart over there and see how the market is setting up. See if there's any new opportunities happening at the moment, which, as you can see, market is pushing below. So what I want to do is I want to look for USD CHF if it's still over there. Where's USD CHF? Okay, so USD CHF has pushed below. So now I can place my buy stop order, which again, I said I want the entry at 0.7952 and stop loss at 0.7924. So the trade is there. It's back to being valid again. So I'm going to enter on USD CHF. And I think that is the final setup for the trade setups today that I can see. Okay, all the other trades I'm happy with. So that's that. I say with gold, since price is currently testing the supply zone number 1, if I see any signs later on throughout the day or throughout the week, if I see any signs of price reversing from this level, then what I'll do is I'll take my stop loss and minimize the stop loss, or move it to break even so that I'm risk free on this trade. Okay, and that's the only trade so far which is giving a potential to manage the trade moving forward. But again, all the other trades will still need to be managed accordingly once they have triggered, and some are running in profit as well. Okay, so these are the trades for today. Yeah, nothing new I'm seeing here. The only trades that weren't valid were US 30, since it's in no man's land, and US oil also in no man's land as well. But all the other trades I'm happy with over there. Okay, so those are the trades for today. If you enjoyed the session, I would just like to ask those of you who did enjoy the session that if you could kindly leave a review for us for CWG Markets. Leave us a review on today's session by simply scanning the QR code and leave a review, and this will help us to make sure that we keep our sessions and the education we provide to you to the best level and the best way for you to learn and improve yourself as a trader. So please make sure you scan this QR code, fill in the form to leave your feedback, and if you do so and you send me a screenshot on WhatsApp or an email, then I will increase your 30-minute coaching session from 30 minutes to a 1-hour coaching session with myself or any one of my expert team of traders at CWG Markets. Okay, but other than that, if you'd like to contact me, you can either send me an email or you can send me on WhatsApp. Scan any one of the QR codes there to send me a direct message on WhatsApp as well, and we can communicate. I can help you with any questions that you have as well. But other than that, that's going to be it for today's session. Hopefully you enjoyed it, and I will see you in the next trading session, which will most likely be, if I have a look at the calendar, either sometime later next week or in the new year 2026. So other than that, enjoy the rest of your day and hopefully you enjoyed the session as well. It's going to be a bye for now from me today. Goodbye.